G'day and welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name's Matty Michael, and once again, money of mine are coming in the hot seat for Livewire to bring you a bit of a uranium spectacular of what's going on in the ground in Australia and around the world. So, to do this, we've got a couple of experts with us, Berridge from Perennial and Dave Franklyn from the Argonaut Natural Resources Fund. Now, lads, bit of a rip and tear for uranium last year. We've seen a bit of a decline. It did get up to around $107 a pound US on the spot. Now sitting at about 80. As we know, the spot market is not everything in uranium, but it does give a bit of sentiment of where we're sitting. How are you feeling on the yellow cake front at the moment? Sammy, we'll start with you, mate.
I'm cautiously optimistic. I mean, after that big run last year, it's reasonable that the bigger participants in the market take some pause for thought. My understanding is what's causing the sort of hiatus in price rises is a little bit of reluctance from the utilities to re-engage at these higher price levels. But ultimately, their inventories continue to tick down, so they're going to have to at some point, and I think that's what the market's waiting for.
Dave, you had a couple of interesting comments in the pre-chat about this, of where I guess consensus is around uranium, despite the the uranium bulls on Twitter who might argue with you. What are you seeing on the ground?
Yeah, look, a couple of points. Firstly, I think you got to look beyond the spot price and look at where the contract price is, and that's currently around $80 a pound, which I think is a pretty good long-term price. It looks like term contracting was actually below average in financial year 24, so we think we can see more of that. On the consensus numbers, if you look at someone like FactSet, who sort of do consensus. Calendar year 24 is about $90 a pound, and then it's dropping off to 86 and 83 over the next couple of years, right? So, and I think that reflects the fact that demand growth is going to be substantial, but ultimately at some point supply will kick in.
Now, following WNA, the World Nuclear Symposium that was just recently conducted at the start of September, and which is, from my understanding, the fuel buyers go on holidays for the Northern Hemisphere summer. We're coming out of that now. Have you heard anything about any changes in sentiment or possibly some catalysts coming up for uranium following WNA?
My understanding is that interest levels have kicked up. So the amount of tire kicking is increasing, but there's no bites just yet.
Well, we're looking forward to one maybe. Dave, what about you, mate?
Yeah, much the same. As I said, I think term contracting wasn't really up to expectations in 24, and I think that highlights people are holding back, but you can only hold back for so long. So, I think it's forming a base at $80 a pound, and I think it can kick up and probably spike a bit higher. Right,
let's get into the buy, hold, sell. First up, the OG man of uranium, the Johnny Borshoff vehicle, deep yellow, ticker DYL. Flagship project is the Two Mast project in Namibia, sort of just down the road from, I guess, what Mr. Borshoff got up to with Paladin's Langer Heinrich before the last uranium downturn. Deep yellow, buy, hold, or sell, Sammy?
I got to go sell on this one, Matt. It looks like a reasonable project, but just on, after the pullback that's occurred across uranium equities, Deep Yellow has held up much better than some of their peers, and I just think on relative valuation, you'd be selling this one and buying something else.
What about you, Dave? They did recently conduct a pretty chunky capital raise this year. There was some queries around the funding, and which saw a pretty high short interest in Deep Yellow. Where do you see them sitting, buy, hold, or sell?
Yeah, I've got a sell on Deep Yellow as well, and again for similar reasons that Sam outlined. I think if you look at the uranium space, there's only a small number of investable companies globally, really, and it's one of them. But a number of the other peers have had some issues. They haven't, so more money's flowed in there. So, notwithstanding, having a great management team, I think it lacks scale. And I notice on Mulga Rock, so lacks scale at Tumas. And Mulga Rock, I think they're forecasting production in financial year 28, which a lot would need to go right to achieve that. So we got it as a sell.
Very good. Next one, Boss Energy, BOE, the Australian uranium producer, currently ramping up the Honeymoon Well project in South Australia. It's an in situ recovery project. It's just a massive chemistry set. Duncan, the team seem to be hitting the mark with their, I guess, what their feasibility study was outlining. ISR projects are notoriously a bit of a lengthy ramp up. Where do you see Boss Energy sitting? Buy, hold, or sell?
Oh, I'll sit on the hold for this one, Matty. I just need to see some more data from the ramp up to get conviction here and know that the bottom is in. I'm much like the rest of the Australian market. I'm a bit new to the granularity of a ramp up of an ISL project, so I just need to see a little bit more.
Dave, they've also got the 30% interest in the Alta Mesa project with Encore Energy in America. And we saw when the uranium was flying last year, the ETF money that flows into these producers is quite substantial. And with uranium sitting where it is, how are you looking at Boss? Buy, hold, or sell?
Yeah, look, we've also got a hold on Boss. I think the price has come back. Obviously, the market had some concerns about the MD selling down his holding just prior to commissioning. But I think that's created a bit of an opportunity. It now comes down to execution risk of bringing it into production. So we've got it as a hold.
Right, next buy, hold, or sell, we're going with Nexgen Energy, tickers NXG. Now they're listed on as a CDI on the ASX as well as on the TSX. Now they do have, I guess you pretty well publicised, one of the highest grade, largest scale uranium deposits in the world in the Athabasca Basin, forecasting to produce about 30 million pounds. A lot of questions around F1 sponsorship and some possible high corporate costs, but they do have one of the best development projects in the world in the uranium space, but a lot to get through to get that into production. Sammy, Nexgen, buy, hold, or sell?
I'll give it a begrudging buy for some of those reasons. I mean, the resource is absolute quality. It is best in class, but along with F1 sponsorship, I mean, running 2 capital raisings at the same time, really does stretch the friendship a little bit there with management. But the resource is quality, and I think ultimately, a bigger player might come for it at some point.
Dave, Nexgen, buy, hold, or sell?
Yeah, we've got it as a hold. Look, I think on the positive side, it's come back to reasonable value, partly on the back of those governance issues which the market is focused on. But at its core, it is a fabulous asset. It's global scale. It's low cost. I think their OPEX is going to be about $15 a pound. Very high grade. Will generate something like 2.8 billion in EBITDA per annum. So it's a great asset, and so we're happy to hold it.
Just got to get down there first, 500 or 600 metres underground. Once you're there, it's all good. Yeah. Right, lads, we'll let you bring in a buy. Stock yourself that you think's a buy at the moment. Sammy, what have you got for the Livewire team and listeners?
I go with a bit of a dark horse, and that's Bannerman. Again, on relative valuation basis, this stock has been absolutely torched compared to where it was a few months ago when the uranium sentiment was a little bit more bullish. It is a lower grade deposit. You have to acknowledge that, but the metallurgy is very simple. Strip ratio is very low. I think it should get into production this cycle. And if uranium sentiment turns, certainly the scope to rebound in this stock from current levels, I think, is quite strong.
Very good. Dave, where are you? You're heading over to the Toronto exchange here. This is an interesting one. What are you buying, mate?
Yeah, look, my favoured buy in the space is Denison Mines. It's in the Athabasca, but in the eastern part of that. It's got an ISR project called Phoenix Wheeler River, which looks really, really fantastic. It will be 9 million pounds per year. First production 28. Permitting should come through next calendar year. And, we think it's probably the best in class. It's also got 120 million in cash, but $300 million in physical uranium. So that goes a long way to funding the development.
Very good. Righto, thank you very much, lads, and thanks very much to Livewire Markets for letting me take over this uranium episode. And make sure you subscribe to all Livewire's content on YouTube, on the podcast. It's coming out every week and will continue on forever, I think. Beauty, thank you very much.